Hey, good morning, good evening, good afternoon, wherever you are in this world. I hope you're having a great day. Welcome back. My name is Vega. This is SerpentX Tech and Caffeine and Crypto, weekly live stream that we do every Saturday, where I welcome you to join me with your favorite caffeinated beverage of choice, coffee, energy drink, tea, whatever it might be, or just grab a damn water and come sit down as we talk about the weekly news. Now, Bitcoin is still holding above the 50K range, which is nice. We are down considerably today as far as the 24-hour range goes. About 1.52%, sitting around 51.1K on Bitcoin, 2,700 on Ethereum. BNB down to 352, but it's better than the high 200. Solana holding at 107, but it's down 2%. And a few of our other coins doing really well, especially look at that deep green right here on your screen. We got Caspa up 13% at 16 cents, which Red Panda Mining will be going live after me at 12 p.m. Eastern Standard to talk about how our profits. Matter of fact, we should probably go take a look and see how our Caspa KS0s are doing overall. We might take a look at it towards the end of the stream. But as far as news, we're going to talk primarily about Bitcoin. Right now, looking at the daily, we've been in an upward trend for the past 2 weeks, and we are now curling around. Will it be a significant pullback? I'll give you my thoughts here in just a moment. Obviously, Bitcoin regaining that $1 trillion market cap. Talking about how big banks are nudging the SEC for a slice of that ETF pie. How Bitcoin, Ethereum, and Solana all jumped double digits. Can Ethereum and Solana maintain along with Bitcoin? How we're stalling, right? Same way as we saw the curl back down. That 52K might be a little bit out of reach. You might need a little bit more buying pressure to maintain. How other countries are slipping into a recession, and could we see a recession here in the United States? Trend says yes, but I'll let you guys weigh out on that because I'm not a financial expert, nor is anything provided in this live stream financial advice, but I will give you my opinion. JP Morgan making a shock to flip on crypto. We always knew that JP Morgan and Jamie Dimon and them are going to talk ish about Bitcoin or whatever it might be, but then on the background continue to stack them sats like you should be doing. Gary Gensler won't commit to Ethereum ETF as everybody is now being bullish on Ethereum, looking for an Ethereum ETF here in the future. Ethereum traders target 3K. Could Ethereum hit 3K? We'll see. Is Warren Buffett actually warming up to Bitcoin? And Bitcoin mining difficulty hitting all-time highs. What does that mean for miners and the energy providers or the energy government agency or the Energy Information Administration? Looking at cryptocurrency miners and stuff like that. So we'll talk all about those various topics throughout today's show, wrapping up with a quick video on Coinbase. Shares popping after a profitable report from Q4 2022, 2023. So anyways, the chart. Obviously, we hit 52. It looks like we try to break into the deep 52s, mid 52s twice, but we got rejected. And, the highest that we hit short term was almost 53K. It was like 52.8, something in there, right? And obviously, this is looking at the daily, not the hourly, not the 15-minute. I like to look at the longer time frames. But could we see further downfall from this? I do believe one of the things I said was I don't like half pipes. I don't like going straight up. If we go straight up, the fall is just going to be that much harder. We have been going pretty much straight up over the past 2 weeks. We got a couple red candles in there. But if we look at February 5th, from the bottom of February 5th all the way to that level that we hit of 52.8, that is about a 24.6% increase just over the past 2 weeks. So obviously everybody's being bullish. Everybody's, hyping, getting really, I think, not overstretched, but overzealous. And obviously Bitcoin did it just now fall? Wait, what does that say? That says 51.057, but okay, that's USDT. It's almost the same. Obviously it's not the same, but I like to use the USDT because that's where most of my trades happen. But we could easily fall back down to one of the EMA ribbons, like the 20, and we could easily fall back down to one of these legacy lines of 42K. When I say easily, it's not easy by any stretch of the imagination, because as we fall, you can see there's going to be support here at that 47K range, that 48, 47K range. And there's going to be even further support at that 45, 44 range. And then as we get closer to that 42, that's going to be a major support. So I could definitely see us maybe coming down, touching this 20 and continuing upwards. If we were to fall where we are right now to that 20, and let's say it takes a couple days, that's only a 5% decrease. That's nothing too crazy. Big swings like this are common in crypto, but what I notice is it's becoming less common. And Rudd Puts, thank you for being a member of the channel for 12 months. Appreciate you, buddy. But yeah, the swings of Bitcoin has become less common or less drastic, I guess you could say. We still have decent pumps up as we've seen over the past 2 weeks, and we have some decent pullbacks as we've seen in January, early January. So while it's not out of the realm of possibility, I do believe there's a cooling off period that's going to happen here shortly. But let me know your thoughts down in the comments below as well as in the live chat. Thank you everybody for stopping by. Crypto Pounder 4, Son of Rabbit Panda, Neomorphous 1.0, Crypto Craig, Chris Henley, Automatic Beats, and Freedom Miner. Good to see you. Good to see you. Gundy, how you doing, brother? Black Salts, hope you guys are all doing very well. Thank you for coming over for Crypto Mikkel Raid. Real quick, I would just like to say the event that we had this, not this week, but the previous week, Saturday, at the local brewery here in Jacksonville, Florida. It's actually in Orange Park, Florida. It was great. And if anybody that watches this live stream or in live or in the future would be interested in meeting you, me and the owner are considering maybe doing a workshop, and we want to possibly do it once a month, like the second Saturday of every month. Let me know your thoughts and let me know if you can make it out. It is posted on Facebook and then wherever else I can let you guys know on Twitter. So if you're interested in meeting up, I would love to have you, and we can discuss crypto and various projects. We can debate, have constructive criticism for one another, whatever it might be. It's all about the community, and that's why I love you guys. So anyways, Bitcoin regains $1 trillion market cap as cryptocurrency hits over 2-year high. And we can see that on CoinMarketCap. We just fell out of it at 1 trillion just now, but I did see it earlier as we were progressing, right? So right now, Bitcoin is below 51K, but it's above 50K, which is a key number in everybody's head. And we just fell out of that $1 trillion market cap. Easily can be recovered. I think Bitcoin is definitely not going anywhere. The ETF inflows continue to come in. Retail really hasn't entered the space besides you and I that are stacking sats, whether it's through mining, trading, whatever it might be. The rest of the world, the retail investor hasn't really jumped in. Obviously, there's a number of different trends you can follow, and we could just see that the interest in Bitcoin hasn't even hit fever pitch yet, and we have this dramatic amount of inflows coming in from the ETFs and a number of other metrics as well, as institutions and those investors get into the game. So once retail enters the space, and the average mom and pop, get back into it and shake off the L from previous years, depending on when they got in, because really, throughout most of Bitcoin's history, you're up compared to a lot of other metrics, or depending on when you got in. There's only a short region of where you're taking the L. Like if you bought Bitcoin at 65K, then obviously you're at a loss right now. But once people shake off that pain and realize, don't bite off more than you can chew, don't invest more than you are willing to lose, then that plus the ETS plus the inflows plus the drastic reduction in Bitcoin supply, right? Because we've got the Bitcoin halving in 61 days, 23 hours, 35 minutes, and 2 seconds. Once that supply gets cut even further than what it is now, it's just supply and demand. Bitcoin's gonna go to all-time highs and surpass previous all-time highs. My speculation is in either Q4 2024 or Q1 2025. I'm even, my current metric, it has me getting pushed back to Q2 2025 because of an article that we're going to talk about later in the stream. So make sure you stay tuned and smash that like button. But Bitcoin surged to another more than 2-year high on Wednesday, pushing its market cap past the $1 trillion mark as growing success of U.S. spot Bitcoin ETFs turned investor sentiment into more positive. The flagship cryptocurrency was last higher by 4%, sitting around 51.7K. According to Coinmetrics, earlier that morning, it rose to 52, the highest level since December 2021. The market cap or value of the Bitcoin circulation rose above $1 trillion for the first time since late 2021. The move was driven, obviously, in part by the demand of Bitcoin thanks to newly created ETFs. Right, we got a lot of outflows from the Grayscale Bitcoin ETF, and they've been moving to other ETF providers, BlackRock, VanEck, ARK Invest, whatever it might be. I've got a quote here from James Butterfill. I don't know, that's a funny name to say. Anyways, yesterday we saw 651 million in inflows, the largest daily inflows since launch day. They go on to say, furthermore, there was 12,000 Bitcoin 12,000 Bitcoin demand by the issuers yesterday at the time when it was only 900 produced every day. So only 900 Bitcoin every day. And the request for Bitcoin is so much greater than the amount being produced on the daily. Some of the 9.5 billion of new money has entered the Bitcoin market through the fund since they began trading on January 11th, according to data provider CryptoQuant. In the past 2 weeks, more than 71% of new money invested in Bitcoin has originated from the spot ETFs, not including GBTC. And you could see them taking up quite a bit of that market share of the Grayscale as people moved out and moved into others. They had to wait a certain amount of days. But also we saw Bitcoin stock surge or increase as well. Not only Coinbase surging 14%, MicroStrategy rose 12%, Iris Energy and CleanSpark rocketed to 20% and 12%, and then Marathon Digital and Riot jumped another 14% as well. So the crypto stocks obviously getting some of the benefits of the trend, but obviously, as I say with everything, I always urge caution. When everybody's being greedy, be fearful. When everybody's being fearful, be greedy. Do the opposite. Everybody tends to do the same thing, right? Birds of a feather flock together. And usually when you see everybody running towards the crash, you should probably go away from the crash. Just me, but I know sometimes our minds just don't kick in and we just go to the crash anyways. But I'm just going to continue to stack them sats, dollar cost average, and mine as much crypto as I can, being cautious or being mindful of the cost of electricity, because that has not gotten better. Actually, quick question for you in the live chat, or you that watch later on, is your electric bill going down or going up still? Right? Because right now the Fed has paused rates. We might actually it paused again in March, but the cost of living is not. I don't expect it to go down anytime soon either. But is your electricity bill still going up? Has it plateaued, or is it going down? I'd be interested to know. I want to hear your thoughts down in the comments or in the live chat. But moving on, big banks are nudging the SEC for a slice of that sweet Bitcoin pie, that sweet apple pie. The commission recently approved 11 spot Bitcoin ETPs, allowing investors access to an asset class through a regulatory product. However, notably absent from those approved products are banking organizations serving as an asset custodian, a role that regularly play for other ETPs. So banks, big banks, trying to get a piece of that action, right? Of course, they will want to get a piece of that action. A letter requested that the SEC consider modification to Staff Accounting Bulletin 121, or SAB 121, issued in March 2022, which provides guidance around accounting for crypto asset custodial obligations. They stated that it's been 2 years since the issuance of the guidance, and there have been several relevant developments during the period, including the approval of spot Bitcoin ETF. The current guidance requires banks to hold crypto assets on their balance sheet, which makes it costly and hinders their ability to provide crypto custody services at scale. We can see the letter here. And the group now requested the SEC to narrow the definition of crypto assets in the SAB 121 to exclude traditional assets recorded on the blockchain. This would prevent assets like tokenized deposits from falling under strict crypto guidance. They also requested exempting banks from the on-balance sheet requirements, but maintaining the disclosure requirements, allowing them to engage in certain crypto activities while still providing transparency to its investors. So they want to get in. The SEC's got to approve it. How long is it going to take, Gary Gensler to play ball and allow them to do what they want to do? We'll see how things go. Even still, I know you and I wouldn't be using any of the services, right? Like, I wouldn't be storing my crypto at a major bank or a banking partner or whatever terminology that we have for it. Like, I wouldn't store. I will be the custodian of my own cryptocurrency assets through various means. We got full node wallets, we got mobile wallets, we got QT wallets or desktop wallets, which full node and QT can kind of be looped up into the same thing. We got cold storage wallets, paper wallets, hardware wallets. We got browser extension wallets. There's all kinds of different ways that you can protect yourself and store your crypto. If you're not familiar with how to do that and you're new to the channel, please go check out my playlist. I have a decent playlist where I go over each topic and identifying which one you are and then deciding which one is best for you. Please check those out. Share it with a friend, a family member, whatever it might be. Obviously, as Bitcoin has picked up, some of the other cryptocurrencies, at least in the past, have not followed suit, namely Ethereum. Right, as Bitcoin was on an upward trend, it kind of felt like Ethereum was not. Okay, it just really felt like Ethereum was not ETC, was not following suit. No, I want to compare. Hang on. I'm not going to bother about it. But yeah, it just seems like Ethereum was lagging behind. Obviously, Solana had its own little pump comparatively to Bitcoin and other assets, then fell back down. But now this one, it's kind of following suit. So we have Ethereum and Solana jumping up double digits and following suit behind Bitcoin. And they talk about how Bitcoin is up, past 52K, $1 trillion market cap, yada, yada, yada. But Bitcoin isn't their only winner. Ethereum's up at that time of recording or at the time of creating this article, 12.2% to 27.84 per token, and Solana was up 4.7 or 10% over the past week, just a few hours ago, yada, yada, yada. And Solana is getting hyped up pretty crazy as well, right? Solana is definitely taking the world by storm. There's a lot of projects being deployed on it. It's drawing more interest. It's drawn a significant amount of investors, and that can sometimes take away from Bitcoin or Ethereum, right? Like, as investors or VCs might liquidate some of their position in Bitcoin or Ethereum to get in Solana, because the gains you could make off of Solana, that was, say you bought at $80 and Solana pumps to $200, the gains you would make off of that compared to Bitcoin going from 48K to 52K is greater. It's really kind of like a pick and choose, but you really want to focus on assets that you believe in long term. It's not going to be this. I don't think we're going to have a meme coin, Pepe Pal, Dogecoin, Shiba Inu coin that blows up just yet. However, there is one that I've been eyeing that I'm planning on putting an audit out for that on Yeti.uk. Nobody can just say, hey, this coin is going to make you rich over the next month. Get this. And the people that do say that and the people that follow them usually get wrecked. So I would be very careful trying to find that moonshot, because that moonshot, while it may be out there, it's going to be hard to pick and choose that moonshot that's going to, help you do good. We could all use some life-changing money, right? I could do some upgrades to the house. I could help finish paying for David's college. We could get a car that I actually want. Well, I like my cars, but we could do all kinds of things. I pay off debts, but I can get wrecked just as easily. I spend $30,000 hoping that this thing will moon, and then I lose all $30,000, and then I'm back to square one. It ain't worth it for me. So I'm looking at stable projects that are building long-term, have been building throughout the bear market. That's another thing, too. A lot of these new projects that are coming out are just copy-paste, rigmarole, same meme coin, this coin, that coin, whatever, that does nothing for the world the economy, whatever. It just does nothing. I'm looking for things that have beneficial elements, tangible benefits to the world, to the economy, to the overall ecosystem as a whole. But most of these coins are just crap. They don't do anything for you, and they're just a great meme token that somebody who created it is probably able to dump their bags, make money off of you while you lose money. So just be careful. Time in the market beats time in the market. Remember that. Anyways, moving on. Bitcoin stalls at 52K may foreshadow imminent pullback. Now, I do expect a pullback. Not a drastic one, but I do expect a pullback of some type. I could definitely see, a 5-10% drop, maybe get down to 42K, but nothing like we're going down to 10K, like earlier days last year, 2023. But Bitcoin stalling momentum at 52K resistance could signal the pullback. A 33% rise in a few weeks is just unsustainable, and it is. And actually, again, I'm using Tether. This is Bitcoin Bitstamp. All right, so this is a Tether. I was calculating from February 5th, which would have been last Monday, to our previous, and that was 26%. But what they're saying is there's a 33% increase from that 38K. Yeah. So they're calculating all the way back here since January. I'm looking at February. When we rolled into February, we started off the month basically around 42K. They're going back to January. But the uptrend could still continue, with 10x research setting a target of 57.5K for Bitcoin. Now, 57.5K isn't too far away. If we look at where that target is and where we are now, I definitely could see us getting there. And that 57.5 would be right about here. And it's only a 13% increase. That's nothing too crazy. So that's certainly in the realm of possibility. But I do think a healthy pullback or some type of retracement would be good for the overall ecosystem. Then we could continue on and stuff like that. But I'm wondering if this is the calm before the storm, because typically we see this fall before the halvening, chop sideways through the halvening, and then after the halvening continue to chop sideways, and then take off. And I know I was going off the chart here. I was going off the screen. But that's usually what we see. So I still expect that. That's a trend we're used to. But circumstances are a little bit different now compared to past halving cycles. So just going to walk cautiously forward and be aware of my surroundings. Let's see here. The largest cryptocurrency, blah, blah, blah. I don't know why they always start that. The largest cryptocurrency by market cap. We already know Bitcoin's the largest cryptocurrency by market cap. Anyways, it outperformed the broad market CoinDesk index by 8%, extending its relentless rise to 38.5 in late January. The surge was coupled with the accelerating inflows of the ETF, BlackRock, IBIT, however, 52K area is a significant resistance level on long-term charts that capped prices in September and December 2021. A pullback seems imminent and necessarily given the recent rapid ascent of approximately 33% over the past few weeks, suggesting an unsustainable rally. Not really unsustainable, but at a certain point you run out of gas. Like the bulls run out of gas at a certain point, and then we get to a certain level. Maybe we can hold, maybe the bears take over and drop us, but then we pick back up and continue on after we get some rest. Price increase followed by lower volumes have historically been a reliable indicator of false breakouts in crypto, FalconX analyst wrote Friday. The good news is at this point is that liquidity conditions surrounding the January rally remain generally robust, right? So we still have that. We still have that liquidity. But I know you ain't spending your Bitcoin. I ain't spending my Bitcoin. So who's spending their Bitcoin? Well, maybe some mining operations are liquidating, right? It's a good opportunity for them to sell, pay for their overhead, pay for their bills for the next 3 months, 6 months, whatever, getting ready for the halving cycle, right? Get their operations in a good, clean bill of health. Halving happens, you're not as profitable to a certain extent, and then you can make some adjustments there. We'll see. But miners need to sell their proceeds in order to cover costs, operations, whatever it might be. So while you and I, maybe the smaller scale miners, are hanging on to what Bitcoin we have, the larger operations might be selling theirs. So we'll see. We'll see how things shape out. But while crypto remains resilient, Japan and UK slip into recession. Now, a really good individual that I like to watch is the Traveling Trader, and he talked about generally when the UK is in a recession, the US will follow, or if the US is in a recession, the UK will follow. There's usually one with the other. There's only one instance where the US didn't have a recession, but the UK did, or I think that's vice versa. But usually one follows the other. So is the US going into a recession, and do you even care? Because you might be in the EU or what have you. Well, when you have some of these bigger, not bigger, but some of the world leading countries out there like the UK, Japan, US, Russia, China, whatever, have an economic impact, it usually gets felt throughout the world. So is it going to be a short recession? Is it going to be a long recession? Looking at past trends, you really can't determine when it's going to happen, for one, but you can't determine how long it's going to last. So not that I'm saying you should sleep with your crypto underneath your pillow along with your firearms and cash, but you should probably start diversifying if you're not diversified already. If you're living paycheck to paycheck, I would say make sure you have some cash on hand, at least a couple months to hold you off, because you should always have a few months held back. But obviously diversify your positions in crypto. If you're too diversified, maybe it's time to condense. That's something that I did before this recent run up, I think in 2023, is I consolidated a lot of my crap coins into the major players and the major cryptocurrencies that I believe in long term. And none of this is financial advice. I'm just telling you what I did. Take it or leave it. I don't care. But if the US does go into a recession, I want to make sure my family's in a good position, right? That we're not going to be in a bad spot, which is why we refinance at the peak of the housing market during COVID, yada, yada, yada. This is why I paid cash for the car when my Camry just got totaled out. I don't want to accrue any more debt. I'm comfortable where I'm at. I wish I was better off, but I'm not in a position that if we did go into recession, all is lost. So just be mindful that when the UK is in a recession, typically the US will follow suit, and vice versa. However, this time when it comes to crypto, I think crypto would kind of be, and I think that might be one of the reasons why we're seeing some of these institutions dive into crypto, especially Bitcoin, and probably why they want to get an ETF for Ethereum out, is because if we did go into recession, crypto is probably going to be the asset that people run to. Whether or not it's going to be considered a safe haven is still up for debate. But I'm feeling, I don't know. I got a gut feeling that if we did go into recession, people are going to flock to Bitcoin and other cryptocurrencies as a safe haven. When in the past, when the markets, especially the stock markets, as correlated as we were with the S&P 500, NASDAQ, stuff like that, usually when the stock markets took a hit, Bitcoin took a hit. But lately, and S&P has been doing really good. Let's see here, SPY. It's been doing all right. I think we made a new all-time high. So usually when the stock market's doing good, Bitcoin would follow suit, or vice versa. And then when the stock markets do bad, Bitcoin would do bad. But there was a moment there in time where Bitcoin didn't care what the stock market was doing, and it was just doing what it wanted. And I hope that continues, because I do not want crypto to follow suit with all the suits. Get it? Anyways. Moving on, JP Morgan just made a shock crypto flip after the massive Bitcoin, Ethereum, XRP, and crypto rally. Obviously, JP Morgan could talk ish all they want, but yeah, they're going to flip all they want. I don't know what's going on here with my screen, but anyways. What does it say here? Rocketing price, blah, blah, blah. What? Hang on, I got to read this. Bitcoin and cryptocurrencies have rocketed higher over recent months, causing the Biden administration to declare a crypto emergency, with Ethereum up 50% and XRP up 35% over the last year. And we did see, Joe Biden's laser eyes, POTUS. Where's POTUS? Wait, where'd it go? Did they take it off? Or was that just a picture? All right, anyways. Laser Eyes Biden. Bitcoin price top 50K, yada, yada, yada. Now, as a leak revealed, controversial central bank digital dollar could be closer than we thought. Okay, here we go. Wall Street giant JP Morgan has suddenly changed his tune on Bitcoin and cryptocurrency exchange Coinbase, thanks to the arrival of institutional FOMO, right? So institutions are FOMOing in, and they think that the Bitcoin appreciation is contributing to obviously the ETF inflows, which is in turn driving Bitcoin prices higher and pulling other tokens higher as well. JP Morgan analyst Kenneth Worthington wrote in a note to his clients, the arrival of the long-awaited ETF, obviously the last month, has caused 25% increase in Bitcoin price as asset managers led by BlackRock and Fidelity amass huge numbers of Bitcoin and continue to do so. Given the acceleration of the recent days of flows in the Bitcoin ETF and a significant price appreciation of Bitcoin and now Ethereum, we are returning to a neutral rating on Coinbase as we see the higher cryptocurrency prices not only sustaining but improving. Activity levels and Coinbase earnings power are as we look to the first quarter of 2024. So changing their tune as far, and here's the thing, JP Morgan or Jamie Dimon and those guys may talk ish about Bitcoin, but their investors and their underlings know better, and they're just continuing to do whatever they need to do to affect the price, I guess, right? Just like Elon can pump the price of Doge with a tweet, you know, what Gary Gensler does affects the price or influences the price. What the Fed does influences the price. You know, Jamie Dimon and these large financial institutions will do that, right? If they can crash the price or bring the price down so that way they can accumulate more, they will do so, right? Right now we're pushed past, yeah, we're curling back down, but we're above that 50K. I still believe that institutions are still buying in right now, or even at this level, right? Because they see or they believe, like many of us, that Bitcoin could be hundreds of thousands of dollars in the future. Hundreds of thousands of dollars in the future. That's not just speculation. That's just math, right? If you just look at the math and you consider the amount of inflows and how everybody is not into Bitcoin yet, and how there's so much more new money and old money and side money and boob money that could come in, like math says, yeah, Bitcoin could be hundreds of thousands of dollars. So stack them sats. Yeah, the gains again for Bitcoin, right? Let's do some math real quick. Let's just do some math, class. I like to use the Google BTC to USD. Let's say I want to buy $2,000 of Bitcoin, right? That's that much Bitcoin, 0.039. Right? Let's say I buy it today at $50,840. And now Bitcoin pumps up in 3, 5, 6 years to $177,000. You just turned that $2,000 into almost $7,000. But let's say we got Solana when it dipped, and I know a lot of people a lot of crypto influencers. Okay, we're talking about the Wendy O's, the altcoin dailies, the K Dubs, the Jason Appleton. Like, they straight up told me if Solana gets below 20K, they're gonna buy a bunch, right? They're waiting for Solana to get below 20K or $20, not 20K. So it did. There was a nice window right here where Solana was under $20. So let's say we bought Solana at an average of $15, right? Let's see here, 15 times or 2,000. Let's do 2,000 divided by $15 per coin. That's 133 coins, right? Now Solana is at 106, right? Its all-time high was 257. Let's say Solana surpasses all that. Let's say Solana gets up to 340, right? So now times 340, And at $2,000 back in late 2022, it's $45,000. So the gains from some of these smaller coins, and it's not, Solana's not small by any means, right? And that's the hard part, right? People are like, I'm going to get into these coins. The gains you would see from some of these coins, unless you dump significant amounts of money, is not going to be as profound as the gains from some shit coin that just popped up 2 seconds ago. But the risk is just so much greater. So much greater. Yeah, I can go into dog with water, right? It's fully diluted, market cap 23K, it's volume 23K. Nobody buys it. Instead, it flips, right? I invested $2,000 into this. Now it's worth nothing. The project's dead, and I can't even trade it. I can't swap it. Is that worth it? No. But the gains that you could see, if it did go proof positive, if it did go in an upward direction, is astronomical. And I can see why it's attractive. I definitely see why it's attractive. All right? I'm not hating on it, and I'm not saying doing it is bad. I'm just saying you need to understand the damn risk. Moving on, Gary Gensler won't commit to Ethereum ETF, says Bitcoin approval was simply the most sustainable thing to do after losing in court. So we shouldn't expect an Ethereum ETF anytime soon, but that's all I've been hearing, really. You know, ever since the Bitcoin ETF, Ethereum next, Ethereum next, Ethereum next. If Ethereum did get an ETF approved, what could we see Ethereum grow to? All right, let's look at the entire chart. All right, Ethereum's been around for quite a while. It's one of the OGs. Its all-time high was right underneath 5K, 48-something K. What could Ethereum be? Well, if Ethereum became an ETF, and we have a decent amount of inflows and institutional investment, and retail is already in by then because Bitcoin has drew them back in, could we see a $10,000 Ethereum? I think that's possible. Is that going to happen around the same time as Bitcoin's all-time high? It could, but it could not. Because Ethereum, like I said, over the past half a year, well, we're not even half a year, I would say the past 4 to 6 months, you know, going to late 2022, 2023 into here, to where we are now. Ethereum hasn't really been following Bitcoin yet. Right now it's following Bitcoin, but it hasn't been there, right? And the upgrades that they're trying to do and some of the concerns that they have that they're trying to address with sharding in the future, which is years out, if not 2026, and some of the changes with Duncan and updates and stuff like that, you know, some of the other projects are getting the eye rather than Ethereum. So, if anything, what I would say is a 7K Ethereum is more possible. Yes, still breaking or breaching the previous all-time high, but I'm just not as bullish on Ethereum as I would be, even though if they did approve an Ethereum ETF, you know, I don't think it's going to be as astronomical. And then, you know, people, as soon as an Ethereum ETF gets approved, people are going to start screaming for a Solana ETF and a this ETF and a that ETF. It's just going to get a little bit too crazy. Ethereum traders target 3K, but historical data raises a few red flags for Ethereum. From a bullish perspective, Ether could consolidate its vice leadership as the second cryptocurrency to have its spot ETF listed on a U.S. exchange. This would distinguish it from its competitors like Solana and BNB Chain, which it would. If an ETF was provided by, or, you know, created for the Ethereum, or the Ethereum ETF was created, it would be a great component of Ethereum and kind of separate itself from the coins that are challenging Ethereum's crown. Exchanges include Binance and Coinbase are still facing lawsuits from the U.S. SEC regarding security offerings. Therefore, Ethereum ETF approval in the U.S. would significantly diminish uncertainty for its investors. Other positive drivers for Ether include the Duncan Network upgrade, as I mentioned, March 13th. The hard fork aims, among other things, to reduce transaction costs. Why? I just talked about this last week, guys. Why are we saying that? All right, I'm not going to even read that part. It may help But it's not going to be like, oh, hey, here it is. Transactions are reduced. It's dependent. There's a lot of variables. But it is going to improve the overall infrastructure, security, and usability of the network with the Duncan upgrade. I talked about it last week. Anyways, Ether bulls have multiple reasons to believe 3K is within arm reach, but history shows that sustaining such a price level is much harder. For instance, in the weeks prior to April 3rd, 2022, Ethereum gained 42%, rising to around $2,500, or from $2,500 to $3,500. However, the rally proved unsustainable as the price nosedived by about 46% the following 40 days. Traders now question whether Ethereum could face similar outcomes this time around. Remember how I was saying that it feels like Ethereum is not keeping up or following Bitcoin, even though it's doing it right now. You know, here's the start, right? Bitcoin was still green on the 16th yesterday, but Ethereum was in the red. Ethereum's in the red today, so that's 2 red daily candles on Ethereum. And if we were to fall from where we were earlier, as around like 2860 to, my bad, what was the percentage again? I don't see a 40% drop. That's a little bit too drastic. 17K. What did the article say just now? In the past, it saw a dropped. Okay, so it gained 42%, but then it nosedived 46%. I definitely don't think we can. Oof, that's a big drop. Down to 1700. That's a big drop from where we were. I definitely could see. So if we would come back down to this 20 EMA on a daily, that's about 10%. That's definitely feasible. I would say up to 20% is feasible, but you got a lot of resistance, you know, at the 26K range, somewhat around the 24 range, 22 range, and obviously that 2K range is going to be a major buying opportunity for some, just depending on their financial situation. You know, going down to 25% to around 2100 is definitely feasible for Ethereum if it did pull back. But I don't know about 46%. However, the point still stands, is some people are eyeing 3K, but looking at past trends and history of Ethereum, they easily see a drastic drop for Ethereum even after the upgrade. Now, to get to 3K from where we are right now would actually be only a 8% increase, 8.7% increase, 8.8% increase, which is definitely possible. If we can chop sideways for a little bit, sustain, and then pump up, that would be astronomical. That would be great. Now, question to you, my viewers, and live or later, are you still holding Ethereum? And if you're holding Ethereum, why? Don't tell people how much you own. Never show people how much of an asset you own. You can share your portfolio mix, and this is just my personal opinion. You know, for your own security, for your own privacy, for your own sake. You know, you can show your portfolio mix, you know, 25% this, 30% that, 100% this, whatever. But don't be showing, like, you don't go around and go outside or go to a casino flashing around money, dude. You're going to get jumped. Don't do that. But I want to know from you, are you still holding Ethereum? Like, is something Ethereum you mined? Maybe you traded it. Maybe you earned it. Whatever it might be. Are you still hanging on to Ethereum, and why? If you're not hanging on to Ethereum, I would also like to know why. Did you sell all your Ethereum when they threw the miners to the side like an old ex-girlfriend or boyfriend or whoever? Did you hang on to it, or did you let it go? Let me know in the live chat. Anyways, we got Ted, excuse me. ETH ETF really won't pump. It's seen as ETH is an unlimited supply. ETH ETF really won't pump. It's seen as, okay, I understand. So the pump won't be, if an ETF for Ethereum was approved, the pump wouldn't be as profound because there's unlimited supply, right? And I think the reduction to Ethereum's burnt supply is also going to be reduced with the Duncan upgrade. So it's going to be less burned overall. So yeah, It's not going to be as profound because unlike Bitcoin, we had a fixed, limited supply. There's only so much that will ever be created and mined or circulating. Ethereum doesn't have that same. So I agree with ERT10. But that's why I said, if anything, I could see it maybe getting around 7K. Some people are calling for 10, 20K. A 7K ETH is in the realm of possibility with an ETF. And it would differentiate it from its competitors like a Solana, like whoever. So we'll see how things move forward. We're getting ready for red pattern mining here in a little bit, guys. Ladies and gentlemen, boys and girls, dogs and cats, and everything in between. We got red pattern mining coming on in about 14 minutes right now. Stay tuned. Stand by for that. Look forward to it. Hey, look, Mike. Bits be tripping. Give some gasoline. Drove through your spot, man. I already watched that video this morning. Checked it out. Warren Buffett warming up to Bitcoin. Berkshire Hathaway profits big from crypto investment. If you have any last minute questions, concerns, comments, or otherwise, please let me know. We got a few more articles to go over. Then we're going to watch this video as we lead into Red Panda Mining. But please hang out with me a little bit. Don't just leave quite yet. And make sure you tip your waiters on the way out. Perhaps the most famous value investor of all time, Warren Buffett, is strongly against Bitcoin and other cryptocurrencies, saying you can't value Bitcoin because it's not a value-producing asset. Buffett and his holding company, Berkshire Hathaway, have been well known for their investment in the stable and profitable companies. Buffett believes that the investments that create new value, instead of relying on investor sentiment, if you buy something like Bitcoin or some cryptocurrency, you don't really have anything that has produced anything. You're just hoping the next guy pays more. Moving on. However, Buffett's strong anti-crypto stance may change after reviewing the firm's performance in 2023. The top-performing investment in 2023 for Berkshire Hathaway was a Brazil fintech, New Holdings Ltd. The company owns Nubank, a neobank that offers cryptocurrencies, credit cards, and banking, as well as crypto trading for users. It offers 15 different tokens, as well as its own utility token called Newcoin. The company went public in December 2021, but have received backing from Buffett and Berkshire during Series G funding when Berkshire invested $500 million in the company. Buffett later increased the stake to another $500 million, with a total of $1 billion invested in early 2022. The investment has paid extremely well, as Brazil has had a very open and accepting stance on cryptocurrency. In 2023, the price of New Holdings appreciated 93%. This huge gains made New Holdings the most profitable investment in Berkshire Hathaway's portfolio for 2023. That investment is especially surprising given the strong performance of stocks in other sectors such as technology. How much of that New Holdings investment was actually into crypto related? But still, JP Morgan, Jamie Dimon, Berkshire Hathaway, Warren Buffett, rat poison, Bitcoin's bad, crypto's crap. Meanwhile, their investments are panning out, looking pretty good for them. Bitcoin mining difficulty has surpassed. NiceHash posted a reposted a post from a gentleman. I can't remember. Don't quote me on it. And the network hash rate has increased drastically. Now, we hit previous all-time high of around 684 million. Let's see here. BTC difficulty. Network. Bitcoin. Difficulty. Do we not have one? I could have swore we had one. Anyways, let's see here. Network hash rate has increased. We hit a previous all-time high on the 2nd of February as far as hash rate. Bitcoin network difficulty. Usually these charts are a little bit lagging. But yeah, we're hitting a new all-time high. If I move out of your way here in the upper right-hand corner. We hit a new all-time high on February 14th. A few days behind, obviously. And that's going to impact your overall proceeds of the amount of Bitcoin you earn per day. Right, as there was just an epoch. We just had an update to the overall difficulty. You could see in the past, right, what the difficulty was, and has consistently climbed up. And this recent epoch has increased the network difficulty. So this is Bitcoin difficulty. Where was that post at? Hits records. Bitcoin's hash rate hits records. Da 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 da. Where did that post go? They reshared somebody else's post. I just can't remember what it was. Bear with me 1 second, please. Thank you very much. Thank you. Thank you. I could have swore I retweeted it myself. Just can't find it right now. Either way, just know that mining profitability is taking a hit. It's taking a hit. Speaking of which, let's go look it up. Hashrate.no. Let's go grab a few ASICs. Bitcoin ASICs, that is. So let's see here. Bitcoin ASICs, Bitcoin ASICs. We could do the What's Miner, right? What's Miner making around $14.67 per day, but only around like $2 profit after cost of electricity. What's another one? S19 XP, $11 a day, but 20 cents profit after electricity. S19K Pro, $9 a day, no profit after electricity, negative 47 cents. And obviously, there's a bunch of other miners out there. Obviously, some of the Casper miners looking pretty good, as a matter of fact. Where is that damn thing, man? Isn't there? Hang on. Okay, so the K10 is considered an FPGA. I forgot about that. Duh. So Zscaler, stay tuned to the channel. I'm gonna have a video on that, hopefully for you in March. But yeah, Caspa KS3 making about $83 a day, 71 after electricity. KS3M $62, 50 after electricity, and electricity is I think I have mine set at 15 cents. Yeah, I have mine set at 15 cents. The national US average is 20 cents, but obviously it's dependent upon your electricity and stuff like that. KS0 Pro, which Red Panda Mine is going to talk about with you today here shortly. $2 a day, $1.73 profit. So considering the price of Caspa has gone up, it's looking pretty good. Caspa miners at the top of the charts. The only other thing that comes close or is in that vicinity is the K7 and the Jazz Miner X16-P. And if you're looking at the Jazz Miner X16-P, check out my Jazz Miner affiliate link. Helps out the channel while you get your miner. But yeah, mining difficulty surpassed 80 trillion ahead of the halving. As the network hash rate and difficulty continues to climb, you know, obviously that's going to impact profitability. As it automated readjustment on February 15th, Bitcoin mining difficulty was due to increase by estimated 6%, according to data from monitoring resources on BTC.com. If it comes to pass, it will take the difficulty to new all-time highs above 8 trillion for the first time. Bitcoin mining rewards will be cut in half in April, as we know with the halving. To fight inflation, Bitcoin programmers baked that in. So the rewards are going to be dropping from 6.25 to 3.125 Bitcoin every block reward. So we'll see what happens with the difficulty after the halving. Like, are they going to be large operations that shut down? Did they already price it in? Are they good to go? Is their electricity rate good? We're just going to have to wait and see how the network pans out in the long run. But I definitely would urge caution. Definitely would urge caution. All right, 5 minutes till Red Panda Mining comes online. Hopefully he's already awake and not telling me to keep going. But I appreciate every single one of you for stopping by. What's up, Red Fox Crypto, DJ Mine? Sorry I didn't say hello earlier. Just looking around. You are just looking around. Gandalf Gray, Keith Bretts, Seb. Hope you're all having a great day. But US EIA, or the Energy Information Administration, has sent letters to cryptocurrency miners, right, requiring data related to the energy consumption configuration of their mining sites. According to one of the letters posted on social media, miners have until February 23rd to report the info regarding the activities carried on in January 2024. So according to reports, Dennis Porter, which I urge you to follow them, CEO and co-founder of Satoshi Action Fund, cryptocurrency miners have been receiving EIA letters compelling them to deliver data regarding the energy consumption of their activities in January. More specifically, the EIA requires the miner to fill out an EIA 862 cryptocurrency mining facility report, which includes questions regarding the identification of cryptocurrency mining company, the electricity consumption of each one of the mining facilities, and the energy providers that supply this energy consumed during the referred period. In addition, the form also includes questions about the characteristics of the mining equipment used, its age, its electricity used, the hash rate produced by these machines. The letter also imposed an ultimatum on the data delivery, which has to be sent to the EIA before February 23rd. Answering these questions is mandatory, and the EIA 862 specifies that failure to comply may result in criminal fines, civil penalties, and other sanctions as provided by law. Porter also mentioned which they're, by the way, they're leading a movement to regulate Bitcoin at a state level in the United States, stated he strongly disagreed with the actions of the EIA on the subject due to relevance to cryptocurrency mining industry. He declared, "This is not how the federal government should be interacting with a new and growing industry that has so much potential." The institution received clearance from the Office of Management and Budget, or OMB, to carry out these surveys in January, stating that cryptocurrency operations might result in public harm. Nonetheless, the measure has been criticized by several pro-crypto mining groups, which believe decision constitutes an overreach of authority. And I would agree with that. I would strongly agree with that. It's definitely an overreach of authority. Now, if you don't know David Porter, I would recommend you follow them. Did I say his name wrong? Where's he at? Dennis Porter. I don't know why I said David. Met them at Mind Disrupt. I would check them out. Really knowledgeable person. Drop that in the live chat for you guys, ladies and gentlemen. And let's see. You know, you can always see Bitsby Trippin is also working, obviously, with the government and their state and regulatory personnel. You know, they're trying to do everything above board. They're trying to work with them, educate them, all that good stuff. So we'll see how things go. But I wonder what their thoughts are. Maybe I can get their thoughts in the future and see what's going on and bring you guys a video about it. But they've been dropping vlogs. They got multiple farms, and they help consult other people in their farming operations. Wow, that was a mess of wires. Holy crap. Holy smokes. But yeah, also, if you need assistance with anything, a lot of knowledgeable people out there. Most of the information is online and free, but whatever information that isn't online and free, feel free to reach out to myself. Bitsby Trippin, he's usually busy. They provide consulting. Son of a Tech, if you're in the Texas area. You got some people in South Florida like Hawk Crypto or Terra Hosting. You got me here in the South, like I help out in the Southeast region, Crypto Mikkel, as well in the Midwest, you know, Oklahoma, Texas area, in that area over there. California, who's my Cali guys? I know there's some people in Cali, but you got a whole slew of people that can help you out. So if you have any questions, please let us know. Enjoy the rest of the show as we get ready for Red Panda Mine and go live here in just a moment. Let's go find them real quick. Not live yet. I got a very important meeting, so I'm not sure how long I can stay. I will be a little late. Man, come on, Red. Every time. You're late. Every time. So I guess it's my job to entertain you. Maybe, possibly. Here's the wires that I didn't get to show you because I was too busy. Oh, well, you guys saw it. You just didn't see my face. Not that you want to see my face, but let's sit back and watch this as we get ready for Red Panda Mining. Please do me a favor. If you do leave before this video ends, hit the like button. Make sure to get subscribed, hit the notification bell to stay up to date. And thank you so much for stopping by. Hang out with me. Otherwise, let's get ready for Red.
company posts its first quarterly profit in 2 years. We bring you an inside look at the Africa Tech Summit in Nairobi, Kenya. And as several crypto companies begin to emerge from bankruptcy, we explore what it means for the industry, markets, and for customers with tied up funds. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices in the red to end the week. However, Bitcoin still traded above $52,000 as of noon Eastern. The cryptocurrency dipped less than 0.5% compared to the day before. Ether dropped more than 1.5% to the $2,700 level after crossing $2,800 yesterday for the first time since May 2022. And Solana fell more than 4% to $109. For the week, Bitcoin's up more than 9%, while Ether jumped nearly 12%, all as of noon Eastern. All right, let's talk about the top stories. Coinbase shares surging today after the company posted its first quarterly profit in 2 years. The largest U.S. venue for buying and selling crypto revealed yesterday after the bell that net income totaled $273 million in the fourth quarter. The profit was driven by broad expectations that macroeconomic conditions will improve this year and the approval of the first spot Bitcoin ETFs in the U.S. The majority of the 10 currently trading spot Bitcoin ETFs use Coinbase for their Bitcoin custodian.
For anybody worried about cannibalization, ETFs have been positive for the industry, which has been additive for Coinbase. We're seeing elevated engagement and net inflows across both retail and institutional Q1 to date. What's even more important is that every institution is now starting to hold crypto. The asset class will be a standard part of every diversified portfolio.
Coinbase said that its net revenue was $905 million in the fourth quarter, up nearly 50% from the same period last year. It said transaction revenues were the primary driver of revenues for the last quarter of 2023 and added that subscription and services revenue remained relatively flat. The company added that consumer trading revenue was nearly $500 million for the quarter. That's up 79% from the quarter before. In an exclusive interview with CNBC yesterday, Coinbase's chief financial officer said that the company didn't have to adjust fees to account for the higher volumes coming through the platform.
A lot of the results of our fee rate is just the mix shift on our platform. Who traded what product in the quarter? And so in Q4, when we saw higher volatility, we grew simple trading, but advanced grew more. And so the growth of those advanced trading customers and the volume per trader led to the fee rate coming down on average in the quarter. But it's purely mix shift, just math, no change to fees in the fourth quarter.
Coinbase shares soared more than 15% by midday today. Next, crypto companies, investors, and a whole lot more came together to discuss leading technology innovations at the Africa Tech Summit in Nairobi, Kenya. That event wrapped up yesterday, and Crypto World's Mackenzie Sagalos was there to find out why stablecoins are getting so much attention at the summit.
I'm here in Nairobi for the Africa Tech Summit, where I've been speaking with CEOs from across the continent about everything from generative AI integrations into banking to the latest innovations in crypto, DeFi, and fintech across Africa. Visa, AWS, and Stripe are all here, plus some of the biggest local players in cross-border payments. Now, by far, the biggest topic of the conference is the mass adoption of USD-pegged stablecoins in Africa.
So we use stablecoins like Tether, USDT to move money from one place to another, so moving money from the African continent out and even within Africa.
One reason why stablecoins are so disruptive in Africa is the fact that there's virtually no access to dollars across the continent. So if you go to a bank and need to make an international payment, you can't really do that with traditional financial infrastructure, in part because there is very little liquidity of local African currencies. What stablecoins like USDC are doing is giving people access to dollar-denominated currency and yield for the first time ever.
So we use stablecoins really to help people do everyday things like money transfer or sending money across Africa, because at the moment money transfer across Africa is very hard and at the same time very expensive. Using blockchain and crypto technologies allows us to make it cheaper, the rates even better for every customer, and accessibility as well. It comes straight to your app. You don't have to go get it in a bank or anywhere else.
Stablecoins are also considered a safer store of value than local fiat currencies in some countries. And crucially, they provide a way for people to access dollars in order to do things like move money around the world. Another hot topic at the conference is how virtually all the big fintechs are using generative AI and credit scoring to evaluate prospective customers. Meanwhile, Bitcoin's recent and massive jump in price to levels not seen since the last bull run in 2021, not as big a focus for many people on the ground here because it's really all about getting access to USD in some capacity.
All All right, turning to crypto bankruptcies for our main story. 2022 was a year filled with crypto defaults.
I hear his music. All right, Red Pen is about to go live. By the way, the Celsius bankruptcy, I was only able to claim one portion of it. It was, if you signed the document, you only got 72% of whatever your holdings were. And I didn't even get that because the Ethereum one couldn't be claimed and they're not responding, or they're taking forever to respond. So if you got your letter and you were able to use the claim ID to get your funds, congratulations. Hopefully you learned your lesson. I didn't lose anything that would hurt me. It's not anything I could have, that could make or break me. But just know that Celsius bankruptcy, as I stated in my previous videos, if you haven't been watching, how to claim, what to do, Venmo, PayPal, very easy to do, to give you a claim ID, you put in your birth date. Unfortunately, if somebody were to intercept that and go to their PayPal or whatever and put in a birthday, which is easy to obtain online, your name, which is easy to obtain online, and complete the KYC process with Venmo and PayPal using your information, they could easily claim the funds and then send it to themselves somewhere else. So hopefully Celsius continue to pay people back and you got your money. If you didn't get your money, keep an eye on your emails, and good luck to you. Go head over to Red Panda Mining. Thank you so much for watching, and just have yourself a good weekend. I'll catch you all later. And now, a word from our sponsor of today's live stream.
You know quantum computers, you know blockchain, but do you know both together? Dynex was the first platform to create a neuromorphic supercomputing blockchain-based algorithm which solves real-world problems. And the best part? Anyone can post a job, whether a company from the Global 2000, a machine learning job, or fintech and pharmaceutical. And if you don't want to program it yourself, get an expert directly at the marketplace. Run the job and be impressed by the fast result.